Okay, guys, this is part two of my tax basics talk. So, in this part two, we're going to learn about adjusted gross income, of course, through the story of Dr. Kimchi and Dr. Kimbap. Just to recap on part one, we talked about gross income. So, gross income is sum of all incomes unless exception like Section 121, home gain exclusion applies. And understanding these exceptions that lower gross income is big part of tax planning. And gross income is a starting point of every individual's tax return. So let's talk about adjusted gross income on 1040 anatomy. So adjusted gross income is also called AGI for easy communication. As you can see, gross income becomes adjusted gross income, but not magically. There's some transformation that happened right here. And what is that? Guess what that transformation is? If you guess adjustment, you're correct. That's called adjustment. Also called adjustment deduction. Its nickname is above the line deduction. And you're going to see that term a lot. And I always wonder, why is adjustment deduction called above the line deduction? The answer is magically there's some invisible line that run across adjusted gross income where deduction above that imaginary line is called above the line deduction. Below that is below the line deduction. So next question is, what's so big deal about AGI or adjustment deduction or above the line deduction? They're all the same thing. Why does it matter? Why? Here's a big deal. AGI is a number that IRS uses to determine who gets free money. We're talking about tax credit, and who qualifies for additional deductions. What would be an example of additional deduction to residents and fellows with the people with student loan? Student loan interest payment is an adjustment deduction as long as your AGI is below a certain limit. We're going to talk about that. So generally, lower the AGI, the more likely you're going to qualify for a free money or additional deduction. So of course, adjustment deduction is what lowers your AGI. So next question is, where do we find this magical AGI lowering adjustment deductions? They live in part 2 of Schedule 1 of Form 40. Long list, you're going to fall asleep. So I'm going to share ones that are relevant to you, the key adjustment deductions. Here they are. So you look at line 13. If you contribute to a health savings account, if your employer offers it, then the amount contributed counts as adjustment deduction. Pretty cool. So let's look at line 16. So if you contribute to your retirement plan through your 1099 income, then that also qualifies as an adjustment deduction. Let's look at line 20 and 21. So these two lines items are pretty interesting. So traditional IRA contribution can become adjustment deduction as long as your AGI is below a certain limit. Same thing for student loan interest deduction. Student loan interest payment that you make can become adjustment deduction as long as your AGI is lower than a threshold. So when you add up all those adjustment deductions, then that total flows into line 10 of your 1040. And once you subtract the adjustments from your gross income, then you get adjusted gross income on line 11. So let's talk about one of the most strategic adjustment deduction that you can use, especially if you're moonlighting or thinking about moonlighting. So your moonlighting related expenses can qualify as adjustment deduction, aka above the line deduction. That means if you incur legitimate business expenses related to your moonlighting business activities, that will create adjustment deductions, which in turn lowers your AGI. Then you can qualify for free money and additional deduction. Hope that rang a bell, because if you heard someone say, hey, you got W-2, start a side gig so you can write things off. This is exact mechanism through which you can get a tax benefit. So note, expenses related to your W-2 job, your residency or fellowship are not currently deductible. So let's talk about what actually qualifies as a legitimate and deductible business expenses. These are the two terms you're going to hear over and over again throughout your work life related to tax. To qualify, the expenses must be ordinary and necessary, which means they're common in your industry. That means that's what ordinary means. And necessary, which is helpful for your business. And these expenses need to be related to your moonlighting work. So things like laptop and cell phone, if you use them exclusively for business, would qualify as a deductible business expenses because you need them. You can apply this rule to other business expenses. So if your side gig needs certain items and you have a receipt to back it up, then it probably qualifies as a deductible business expense. Let's take a look how this plays out for our friend Dr. Kimchi and for her 1099 income. So, knowing that she was going to bring in $15,000 of 1099 income, she planned ahead. Her goal was to incur legitimate business expenses that would offset her $15,000 of income. These type of strategies is what I use for my 1099 income. Let's see how she did it. So she purchased a vehicle that she exclusively used for her moonlighting gig, which gave her $9,000 deduction. And knowing about home office deduction, she planned and she followed all the rules in order to qualify for the deduction. So what she did was she carved out a dedicated space in her apartment, and she did administrative work, all about administrative work in that space. That way she was able to qualify for home office deduction, and she was able to write off a part of rent and utilities, and that created $1,500 deduction. She also bought a work laptop, which she exclusively used for charting, moonlighting related work, and made sure that she had proof of purchase and clear business purpose written on her receipt to make it fully deductible. And number 4, she took a business trip and she planned very carefully in order to maximize her deduction. So she created $3,000 of deduction. So let's take a look at how these adjustment deductions or above the line deduction impacted her final tax report card. So let's start with her gross income, which I cover in part 1. So her gross income was still $88,500, regardless of adjustment deduction, because all the income they earn become gross income unless exceptions apply. Remember from part 1? Because she was able to incur legitimate business expenses, ordinary and necessary, which totaled $15,000, her adjusted gross income was brought down to $73,500, right, from $88,500. Remember from earlier slide that if your AGI is low enough, you can qualify for free money or additional deduction. That's where things got better for Dr. Kimchi. Because her business expenses, which became adjustment deductions, lower her AGI, it also unlocked additional deductions. In her case, her student loan interest payments now qualify as additional adjustment deduction. Let's take a look how that actually worked. So Dr. Kimchi knew that only if she kept her AGI below $80,000, up to $2,500 of student loan interest payment could become adjustment deduction. That's exactly what she did. She created above the line deduction through business expenses. She brought her AGI below $80,000, and she paid $2,500 in student loan interest payment, and that became her adjustment deduction, additional adjustment deduction. Had her AGI been over $95,000, none of those $2,500 would have been deductible. And by the way, AGI used for this purpose is modified AGI. In her case, they're the same as the AGI, just FYI. So let's take a look at the exact math. Her gross income was $88,500, and her because of the business expense strategy that she used, she created $15,000 of above the line deduction, which lowered her AGI further down to $73,500. Because this number is below $80,000, the full $2,500 of student loan interest payment became additional deduction. Now, with that, she was able to lower her AGI further, this time by another $2,500. So because she knew the rule, plan ahead, she was able to hit the right AGI target, and as a result, her AGI was further brought down to $71,000. Pretty amazing. So how does that translate into actual tax savings, right? So $2,500 of additional deduction at her 22% tax bracket, which is just an assumption that I made, which meant she paid $500 less in taxes, and she kept that in her pocket instead. So in short, in her case, creating adjustment deduction legally through strategic planning lower her AGI. And that opened the door to even more deduction like student loan interest payment deduction. So essentially, deduction begets another deduction. Pretty cool. So this is why understanding tax rules and playing the game right can help you win. And your prize is money saved in taxes. So I'd like to share with you a very powerful and famous quote. This quote is written by a Supreme Court Justice Sutherland in 1934, and he said, anyone may so arrange his affair so that his taxes shall be as low as possible. There's not even a patriotic duty to increase one's taxes. In other words, you're not obligated to pay more than what you're legally owed to the government. You're not even being patriotic by paying extra, right? So I think Dr. Kimchi took this advice to heart. She used all available tax rules and planned wisely so that she just paid her fair share and not a penny more. So my recommendation is be like Dr. Kimchi. Know the rule, play smart, win the tax prize throughout your lifetime. Why not? So let's do a quick recap on AGI and adjustment deduction. So AGI adjustment deductions lower your AGI. And business expenses are one of the most powerful adjustment deduction that you can create. And your AGI determines whether you get free money, like tax credit, or you be eligible to take additional adjustment deduction like student loan interest payment deduction. Hope this was helpful. I see you guys in part 3.